Well, here we go. We got the inflation data out today, and it was great. It was very impressive. Inflation is dropping, and it's dropping rapidly. And this was a key point because this is where inflation has now got to a point where it is getting close, or it's actually the same levels as interest rates. And in fact, if we take in what will probably happen next month, or if the Fed go to hike, we are probably very close to where the interest rates is actually going to drop or be higher than the actual inflation, which is a really key point that we're at right now. So this is really impressive. And we were looking at the United States inflation rate, not core inflation. Inflation rate is more important because it contains energy. Energy has been the key factor why inflation has gone up. If energy goes absolutely crazy, it's one of the leading reasons why inflation goes absolutely crazy. And that's what happened. Energy went absolutely crazy, and that caused rapid inflation. Now that energy has been coming down, that has caused the deflation that we have at the moment, or inflation coming down, not actual deflation. And that's the leading indicator. Now, the only things that are propping up this inflation part at the moment was transportation and shelter, and they are lagging indicators. So we know that a lot of these interest rates and what is causing inflation at the moment to still be high are going to be issues that are going to be resolved further down the line. So when we look at inflation right now, inflation looks very good. We entered into the 5%, and this was a major drop from 6 to 5, and you can see here this 5 was very much below what was expected. We were expecting 5.2% on consensus, and on Trading Economics they're expecting 5.3%, and this is from 2 weeks ago when we were expecting 5.8%. This is absolutely major. This is indicating that inflation has rapidly come down and has got very close now to the 2% target that the Fed are looking for. And this is very, very good for the stock market and investors. This is one of the main issues, and one of the main issues is very close to getting resolved this year. Now, the only thing that we have left now is when the Fed meet. The Fed are going to meet obviously in the first week of May, and the big thing that we're looking at now is what are they going to do, because clearly looking at the data here, the clear thing is that inflation has very much been beaten now, and it is up to the Fed to make the right decision. The right decision is not to increase interest rates. There's no need to carry on increasing interest rates when your interest rate is going to be higher than inflation. We know that the key things that are keeping this inflation up are lagging indicators. All that's going to do is now damage the economy. The Fed can now sit back and go, we have done it. Now the key thing is, what are they going to do? Are they going to make the mistake of increasing interest rates? We'll see what happens. That's the major issue. It's out of our hands now. But when you look at inflation, inflation is in a very good place, and this was really good for the markets today. This is very, very good news. Now when we look at the markets actually took the information very positive. We looked at this and I thought, if we can have 5.2%, this is going to be really impressive, and we came in at 5%, which is even better. Now the market should have popped off this news. The market did pop off this news. It probably should have popped off more than it did. I think in pre-market the stocks were up like 1% in pre-market. In my opinion, stocks should have been up over 2-3% today, and they weren't. The crazy thing is the stock market actually went down. Now it has started to put in a bit of a recovery, and if I just refresh that, we'll see what it's up to. Yeah, it's up 0.24%. The market should be up a lot more than this today. Now the reason probably why is because a lot of the bears at the moment are trying to spin this into a negative scenario, a negative case of maybe the Fed increasing interest rates or that inflation is still existing. But when you look at the inflation is clearly down, energy is clearly coming down, and the only things that are keeping inflation high are lagging indicators, and they will resolve themselves. Shelter is one of the lagging indicators that is causing interest rates to be high, and that will resolve itself. So yeah, it's very positive, and the stock market should have reacted a lot more positive than what it did do. But in the longer term, this should start really getting priced in. And obviously, I guess one of the big things that everyone's kind of waiting for now is the Fed. Are the Fed going to make the right decision? So we'll see what happens there. But today we did get some really good news around the inflation, which is absolutely amazing. So just a quick summary of inflation there. Now I thought as well I'd cover 3 stocks very quickly today. So Inmode is having a really good day. If I actually just refresh it here, it was up 7%. It is currently, it's up 7%, nearly 8% on the day. Having a really good day today. Now, obviously, you guys know I have been buying. I actually bought him. I normally don't let you know this early unless you're on the Patreon, but I actually bought some Inmode this week. And obviously, if you watch the stocks that I'm buying that I posted on Sunday, I believe it was, you would have seen that I actually bought last month as well. So it's one that I've actually gone to the point of view where I've gone, I really need to average up on this position more and more. And it's one of those really tricky things. Is averaging up on a position is really tricky, and it's a hard thing to kind of get your mind around, because it's very easy to buy. If you love a stock and it goes cheaper, it's very easy to buy it because you're going, well, I loved it at $30 and now it's at $20, I'm going to make more money. But when you're averaging up, it's quite harder to get your head around the process of going, well, it's still actually a really attractive evaluation. So I'm still going to make a lot of money, and the upside's just getting bigger and bigger. And you're also looking at this going, well, I'm up so-and-so. Do I want to keep averaging up? And it's a hard concept to get your head around. But if it's a fantastic company, then you're thinking, well, I might as well carry on buying it. And it's a stock that I'm really happy I keep averaging up on this position. Obviously, it's a stock that I've owned since around about 2020. I think it was June when I started buying this stock. It was around that $15 range. So if I didn't average up, I would actually be up on this position over 169%. Now, obviously, because I've been averaging up, I think today I ended up at the moment I'm like 80% up on this position or something. But I'm also, it's now committing more to the portfolio. It's a bigger chunk now, and the reason why I've committed that bigger chunk is because I'm looking at the company and going, this management keep executing, I've got to keep buying shares, and they're still very, reasonably valued for what you're getting the company and what it's producing at the moment. Now, the reason why it had a pop-off is it brought out preliminary earnings. Preliminary earnings were absolutely amazing. They always bring out preliminary earnings because they're absolutely smashing it. And I think at the time when these preliminary earnings came out, and I actually posted on the Discord as well, I was like, why is the stock not up more than this? Like, it was up 1%, and I think after I posted it was like maybe up 2%. And I was thinking, look at the valuation, look at what they've just brought out, and the stock's only up 2%. Like, this stock should be up massive amounts more than this. Now, it's good to see that was actually starting then to get priced in today. It did start popping up 7-8%, but it was just crazy to see that it took the market so long to like start buying into this stock, and it just, the market in general has just been so slow to look at opportunities and buy them. But yeah, obviously getting a bit more of a fair reflection on the share price. I mean, just look at this. So the company expects Q1 revenue to be in the range of 105.7 million to 105.9 million versus the consensus of 100.25 million. This is crazy. This is like, obviously towards 6% beat on the revenue, which is crazy good. And you look at the EPS as well. The EPS was a big beat, 0.5 to 0.51 versus the consensus of 0.46. That's really good as well. And this company should continue probably towards, I would expect towards the 20% mark this year. And you're picking this up for 20 times earning, which is absolutely crazy. So fantastic earnings here from Inmode. I've got to say, and sometimes there's a few people from the companies that I talk about that do watch my videos. I do know it happens. So if there is anyone from Inmode watching this video, I just have to say one thing. Please make the right decision. You're currently sitting on 547 million in cash. You're a 2.9 billion market cap company. At the moment, you're going to then put probably towards 161 million. Actually, it'll be more towards nearly 200 million forecast at the moment. 200 million on your bottom line. That's going to go to your balance sheet. You're going to be sitting on probably somewhere towards 700 million. 750 million by the end of the year. Now, I know you're looking for an acquisition, and I don't blame you for storing up the cash for making an acquisition. But please start just using that cash a little bit while the shares at these sort of value. Even if it's just 10 million, 20 million would be perfect. If you can do a 20 million buyback of shares, commit to it now, please, because it's definitely worth it. The cash that's on the balance sheet, it won't affect it that much, and it's something to reward shareholders with, especially when it's down at these sort of levels. Please commit that cash to a share buyback. I know that they're looking for an acquisition, but that would be a very good move. So that was Inmode. Next one is Gang. I've been having a lot of requests to kind of talk about this on the YouTube channel. I've been a bit hesitant to talk about it on the YouTube channel because I've already talked about it on the Patreon. It's one of those that I don't want to talk about something on the Patreon and then to cover it on the YouTube channel because it's pointless covering it on the Patreon. All those people that pay for the Patreon, it makes that service irrelevant, and that's why it's really good to be on the Patreon, because we cover some of the topics that we can't cover on the YouTube channel or on the Patreon. So yeah, I don't want to do it too much where I cover something on Patreon and then I go cover it on YouTube, but I will do it this time because there was a lot of demand for me to talk about Gang. And I'm guessing the reason to talk about Gang is because the share price had a bit of a drop off after the reported earnings. Now, since then, the share price has actually basically recovered from where it was. It had a little bit of run up the like day before earnings. So apart from that run up, it's actually towards like a break even point of view now. So it has recovered some of the dip that it had from those earnings, but obviously the share price has been in the dumps since and since I bought it, the share price has been down a fair amount as well, which obviously isn't great. It's not great to see a company that you talk about and you put your investment in and it doesn't work out on the share price point of view. And looking at Gang, like, I never thought it would get down to the point of a 56 million market cap company. I think the company's on nearly 40 something million in cash on hand. Let's have a quick look here. They currently sit on, nearly 50 million in cash, and the company's currently valued at 56 million. I think they paid like 100 million or something was for Coolbet. So yeah, it's crazy to see that it's got down to these sort of levels, which is unbelievable to see here. And I do think that it shouldn't be valued this low, even though there's been a few things they should have done better. I don't think it should have been this low, but there's definitely things that Gang need to be improving on in the next coming year. So if we have a look at the earnings, the growth was actually really good. You can see here the revenue actually increased 21% year over year. Now, if you look in Q2, Q3, the growth wasn't what we want it to be. The growth got impacted by the FX and the whole rate, and that was coming in a lot lower than what we wanted it to be, and that wasn't good enough, and that was impacting their earnings. Now, because the FX impact has kind of resolved itself and some of the take rate has resolved itself, we actually have a company that was going back to growing at decent rates. That's really good. We don't want to have a dead company. We don't have a dead company that's struggling for growth, so we don't have this here. It's still growing at really good rates, 21%. I can name plenty of companies that would wish they were growing at that sort of rate, so that was good. And I was a little bit worried as well with the Gang because they had the World Cup coming on. And I listened to DraftKings and they said basically they've not seen any kind of good tailwinds from the World Cup. It just kind of replaced the football season that went missing. So I was a bit worried for Gang, and obviously they did do very well from this situation, and maybe it helped from them being a bit focused in Latin America. Obviously Argentina did very well, that maybe helped them a little bit. So they did very well in this quarter from a growth point of view, especially the B2B. The B2B grew 26%. The B2C segment could have been a little bit stronger, and I would like that to improve a little bit, but still grew in the right direction. You see active accounts did increase. Obviously the Latin America does seem to be a good success story. Maybe the Canada was a little bit of weakness and what kind of let them down here. Now, obviously, operating expenses look incredibly high, but when you look at it, there was a 137 million impairment charge that they took during the quarter. So that's obviously not an actual loss. That's not a cash actual burn that was there. That was the impairment charge that was taken. So nothing major there. Now, the big thing is that the adjusted EBITDA was negative 0.4, and that was better than last year, which was negative 6 million, but this should have been positive. This is where the company hasn't lived up to my expectations. The adjusted EBITDA should have been positive this quarter, and it wasn't. And that's something that they do really need to improve on. And you can see here they actually grew 14% year over year, which was good. And if it wasn't for them 2 weak quarters in Q2 and Q3, because the FX impacts, this would have been a lot higher as well, which we would have been really happy with. If you actually have a look into the parts of the platform are still putting in good amounts of profit. You know, got 84% here from the B2B, and the B2C had a contribution margin of 65%. The take rate was a little bit lower in the B2B, but the B2C was a good sports margin, so this was something that was a bit weaker in the start of the year, and that has started to recover. So the take rate could be a bit better than what it has been, but the sports margin did recover. So we can see here, the company itself actually throws off good amounts of gross profit. That's the big thing. The actual service is actually throwing off good amounts of gross profit. And you can see here, the actual revenue is 36 million, the cost of revenue is 10 million. So there's 26 million there of room that the company actually makes on gross profit. This isn't a company that is struggling for growth, and it's not a company that struggles with margins. It's got good margins. And this is where the company has gone wrong and not really executed, in my point of view, is that they've not controlled the costs. If they could control the costs with sales and marketing, products, technology, G&A, and they move into profitability, this company is doing absolutely fantastic, but that's not what they've done. They've not got to the level of profitability that I want them to, and that's why the company has been punished. It's like when you look at G&A jumped from 10 million up to 13 million. That needs to be controlled. Right there is 3 million that needs to be controlled there. Them costs should be staying the same or even on increasing slightly. That's where, you know, there's been a bit of an error. It's same with the products and technology. Same again. That needs to be controlled a little bit. Sales and marketing, same again, that needs to be controlled a little bit. Controlling these little parts of the business is where you get to profitability, and that's where the company really needs to improve. And same with the total operating expenses. Even if you take the impairment charge out, this needs to be controlled a little bit better than what it was. And then that's where you get to the point of view is that between the impairment charge and the operating loss, you've got about an 8 million gap there. That's where they need to start making that 8 million up. They need to make that 8 million up from that situation there. And overall, this is why the stock has got punished, because what has the market been focused on in the last 12 months? It's been focused on profitability. In my opinion, or what I forecast when I bought this company is for Gang now to be pushing into profit. In the long-term scheme of things, I wanted Gang to start pushing towards a 10% profit margin. You look at the situation right now, Gang is not pushing towards the 10% profit margin that I wanted them to do, and they have failed to execute from my expectations here, which isn't good enough. And this is why I can't buy it. Even though I'm looking at the company and they're still doing okay from some points, they haven't executed on the profit, which they should have done this year. And this is why the share price has been punished. And this is also why I can't buy shares at the moment, because even though the company's still got good gross margins, it's still growing revenue, they've not been executing on the profit. And this is what the company needs. It needs and this is maybe why the CFO has left in the last few months. It needs a CFO or management itself, or Dermot, the CEO, to grab the company by the scruff of the neck going, look, we are doing very well as a business, but managing these costs needs to be better. We need to, every little part of the company needs to be managing. We need to be cutting $1 million here and $1 million there. We can't afford to take on them extra costs. We need to start driving towards profitability. And that was the aim coming into the year, and I haven't executed. So I can see why Gang has been punished on the share price, and it needs to be doing better on the profitability to be performing better, and that's the ultimate issue here. There's also a couple of things that they should have done a bit better. I think a review of the company is never going to be a good sign. That obviously punished the share price. I think coming out with out any guidance is obviously going to punish. Like when these earnings came out, the stock was actually up on when the earnings came out, and then everyone looked at that and it's like, same again, it just needs the management to be tighter on the situation and manage what's going on in here and not leave Wall Street guessing and not hitting them expectations. And yeah, overall, like that's where the company's kind of gone wrong, and I need them to do that better for me to carry on buying. And at the moment, I can't buy until they do that, and that's ultimately where Gang is at the moment. And hopefully, in the next 12 months, they grab the company, or someone in that management team, or a new CFO they bring in, grabs the company by the scruff of the neck and starts driving that top line how it has been doing, but manages the costs. That's the key thing here. So that's Gang anyway. So hopefully they can improve a little bit this year, because it has been disappointing how they haven't been able to deliver that revenue growth and them gross margins to the bottom line ultimately. And the last one's Hollywood Bowl. So this stock had a little bit of a pop-off on Tuesday when it opened up. Or I said Tuesday, I mean basically it's up 1%. The actual rally was on Thursday. I don't know if the actual earnings were leaked on Thursday before the actual results, but it is up a little bit. I think it should be up a little bit more because the results they've just brought out was absolutely fantastic. Same again, it's a company that I own. It's one of my biggest UK holdings. I've held this since 2020 once again. I think it was about June time maybe I started buying the stock. The stock is up from that June time around 57%. I've been averaging up, so I think I'm up about 40% on this position. But I still think now when you look at this company, 11 times earnings, 4.6% dividend yield. This is a quality, well-managed UK company with a lovely dividend here. 11 times earnings. It's absolutely crazy with this Canada expansion, which is really exciting. I think this is trading a big discount. I think this company should be trading more higher towards a higher teen range on an earnings basis, especially when you're considering picking up a 5% dividend yield, and this is dividend that's probably going to get hiked up going forward as well. I think is incredible value. I think this should be towards a £3, which I think would actually put it somewhere towards where it was pre-pandemic, which would make sense considering the financials are way ahead of where they were in pre-pandemic. But they brought out a trading update. Didn't even realise they're bringing the trading update out. I'm sure I checked on Sunday and somehow I missed it. But the trading update was absolutely fantastic. You can see here the title was Excellent Performance, Demonstrating Continued Strong Customer Demand. Record first half revenue, and this was obviously in a time frame when there's all this energy crisis and recession fears going on, and people still going out and bowling at the moment. So obviously really good there. Up 10% on revenue, like for like up 3.5%, and it said that they have done 7 refurbishments and 2 new centre openings, and there's 2 more set to be under construction in the second half. They can see here they continue to invest into the pings on strings and the solar panels. This is to help the margins. Obviously the string on the pins on strings, should I say? Keep getting that in the wrong way around. Obviously doesn't need a mechanic to kind of fix any of the skittles if they ever break, so that helps gross margins, and obviously saves employing a mechanic to kind of do that situation there or fix anything with that if there's an issue. Solar panels obviously helps with the cost of energy, which is great. It said recently exchanged on a 10th, I can't believe they're up to 10 already, this is absolutely crazy. 10 Canadian centres, and also continue to build the new site pipeline. They said that the Canadian part of the business is performing in expectations, which is really good. And obviously the net cash position here, and a 25 million revolving credit facility that is undrawn as well, by the way. So yeah, this is obviously, you know, really good trading update here from this company. And I think when you look at this company here and what they're doing and the Canadian expansion they've got going on at 11 times earnings, it's one of those that I'm happy of. It's a company that I've been averaging up on for like the last 3 years. Sure, I would have been up higher percentage wise if I just held my original shares from, you know, 3 years ago. But when I've got a company that's executing like this and I think it's still good value, you know, I might as well buy it. You know, picking up what I think is a cheap on the share price, and the dividend yield I'll get from this is great. So yeah, really happy with Hollywood Bowl and how they've been executing. So yeah, talk about the inflation, 3 stocks just talking about there, and updates for them sort of businesses. So I hope you enjoy the video. A little bit of a longer one today, but I'm sure you don't mind. If you could hit that like button, that's absolutely amazing as well. And yeah, catch you in a bit.